Insurance shouldn't just be something that you do once a year. It should be evolving with you as you change your operations, you grow your client base, you grow your geographies, and it should be a constant conversation with that insurance advisor.
Welcome to a brand new episode of the M&A Mastermind podcast presented by Cornerstone International Alliance. I'm your host, Nick Olson. On this show, I get the opportunity to talk with the brightest minds in lower middle market M&A. Together, we discuss industry intelligence, deal management, shared successes, specialized expertise, and much more. If you serve the small to medium-sized business owner, this show will offer you tactics and insights you can use and implement now to become a master in M&A. Hello, everybody. Welcome to a brand new episode of the M&A Mastermind podcast. Today's mastermind is Brian Riemer, CEO of Riemer Insurance Group, a former private equity M&A professional who now leads a second-generation family-owned agency. We'll dig into how his deal-side background shapes his approach to risk, the evolving insurance landscape in sectors like real estate, construction, and professional services, and why treating insurance as a strategic tool, not just a line item, matters for lower middle market business owners and their advisors. Brian, welcome to the show. Excited to have you on.
Nick, thanks for having me. Excited to be here.
And like I said previously, you got a cool setup there. I know this is something you're passionate about and talking about in the work that you do. But tell us a little bit about your company, your firm, and what your focus is, and how you're helping business owners and advisors today.
Our company's been around for almost 50 years, and we work across the entire United States. We have 3 divisions: commercial lines, so think about any sort of insurance for a business. We also have an employee benefits division, so those businesses that need health insurance, dental, vision, disability, etc. And then we also have a personal lines division, and that's bifurcated into what we call private client for high net worth individuals and middle market for everyone else.
Mm-hmm. So you started your career, like I said in my introduction, in private equity and M&A. Tell us a little bit about that part of your career, if you don't mind.
Absolutely. Coming out of college, I wasn't really sure what I wanted to do. And never in a million years did I think I was going into insurance. But I got an opportunity to work in the investment banking role, which was exciting for me because I thought it would be excellent training. It would give me an opportunity to work on really big deals and work closely with senior managing directors to learn from them about how a deal actually gets done. And while I really liked the analysis I was doing there, the parts I really enjoyed the most were the times I could take a step back, think about the value that actually drives a business. And so it was a natural pivot to go to the private equity side, where we actually analyze deals from the lens of an investor. And I had a really great experience there. We did several deals and I learned a ton from that exposure. But ultimately, I wanted to do something entrepreneurial, and my family business was an incredible platform to.
So that's why you got into the insurance agency, the industry. Tell us a little bit about the generation before you, and why that was so important for you to be the second generation in your family and to take on the business.
Look, I think I learned a lot from working on the deal side on how risk can drive value in a deal, how even subtle risks can impact the way a deal actually gets over the finish line, and how people analyze that. And then I looked at the way insurance agents worked, and it seemed extremely transactional to me. So looking at my family business, it was an incredible opportunity to elevate and modernize something that had an amazing platform, but needed to be transformed for the future, and shifting the way it operated from transactional to really strategic advisory, implementing analytics, technology, and more sophisticated data to be able to harness better client insights was something that we've worked really hard to improve and shape our company going forward.
And you mentioned just your time in private equity and M&A, really looking at how much do you equate to that part of your professional career to really look at your family business? You kind of mentioned, but really taking it to that. I mean, what did you learn there that really kind of like this is what we need to be doing in our business too, because like I said, it's almost like, transactional, or you want to be more forward thinking and strategic, as it relates to risk and creating value. And just, now as you're working with other business owners and advising them on their businesses, on how they can, de-risk and create value, and ultimately take your time in M&A to really think about that as something that's going to benefit the value of their company down the road.
So I think a lot of people have this impression on the deals side that it's all about financial analysis and financial engineering. And when I was on the private equity side, what was more apparent to me was a lot of it circled around the management teams. Who are you, and do I want to do business with you? Do I believe in your ability to execute? And what would always shine is those companies that took a proactive approach were better prepared from a risk management standpoint. They really understood what could destabilize cash flows and EBITDA margins going forward, and brought in advisors early. They showed the best at the end of the day. I think that taking that approach and implementing that to our clients and advising them, hey, learning about your insurance products earlier is going to better position you in the long term because you'll have better pricing. You'll be able to implement better controls in place so that in the event you do have that catastrophic situation, your worst day ever, you understand the way your policy works, you understand the policies that you purchase, and how we get you back to where you were the day before the catastrophe.
When you look at the business owners you guys are working with today, how do you define smart risk management, and where does insurance fit into that strategic business toolbox rather than just looking at it as, like you said, as a line item?
I would say that the most successful clients of ours are never asking, just get me the cheapest policy possible. The smart risk managers of their business are really stewards of long-term value, and they want to understand how this actually protects me, and also knowing that not every risk needs to be insured, right? Like there are things that can be transferred through contractual agreements. There are things that you put in place to satisfy lender requirements so you have financing to fuel growth going forward. And having an intimate knowledge of the way your business operates is a critical part of that advice. So working closely with your advisor to better understand, what am I comfortable self-insuring for? How does this policy actually work? And then from there, you're able to put together a customized plan that really is tailored to you and sets you up for long-term success.
When you say work with your, the business owner's advisor, what type of advisor is that typically for you guys? Who are you working with?
So it's really, what I mean by that is your insurance advisor. So
Sure,
your
okay.
insurance advisor should really understand everything about your operations, because even little nuances can make a huge difference in risk. And those subtle differences really do drive value at the end of the day. So get with them to do a risk analysis, go over your cybersecurity controls, review your contracts, review your leases, and then take the time, take an hour, take 2 hours to go through each of the policies and understand where your exposures could be. Because at the end of the day, that could really impact how your business can either flourish or gets derailed going forward.
How often do you recommend having that conversation with your advisor as a business owner? Is it on a yearly basis, maybe more frequently? What does that look like?
Insurance shouldn't just be something that you do once a year. It should be evolving with you as you change your operations, you grow your client base, you grow your geographies, and it should be a constant conversation with that insurance advisor. That is a living and breathing component of your business that sets you up for success. And if you are changing your operations and not having that conversation with your insurance advisor, you're potentially exposed. It should be something that you're doing constantly. Usually what we do is, if we haven't had that many high touch advisory points with clients, we'll set up what we call strategic reviews or stewardship meetings with them to go over what's changed over the last few months, and let's put together a renewal strategy for how we go out to market and present this to our carriers for the upcoming renewal.
So to put it in simple terms, any significant, milestone or change in your business is an opportunity to review what you currently have and have that strategic, conversation with your advisor to make sure that you are not exposed.
Absolutely. But as a general rule of thumb, you should not be meeting with your insurance advisor once a year.
Yeah, more frequently.
Yeah. Being proactive about this really is critical for you to be able to be successful in managing your risk.
I'm going to turn that over to your side of the table. How is that proactiveness, those regular conversations, helping you and your team do the job to the level that you talked about at the beginning, but also to make sure that you're doing right by your clients, as opposed to like that once a year meeting?
For us, it's about relationship building. And like I said, insurance is really meant to be there for you when something really bad happens. And that's really where you're going to rely on that human interaction, those relationships to be there to get those clients back to where they were beforehand. So having that proactive conversation with your insurance advisors really can make all the difference in the world for your business. It can stabilize your cash flows. It can protect your employees. It can lead you to be set up for a better exit or better financing at the end of the day because you're prepared, you can be confident, and you have operational resilience. And that operational preparedness is critical for driving value in your business because, again, not everything needs to be insured. But if you have those disaster recovery plans in place, you have those cybersecurity controls in place, you have your leases and your contracts reviewed, you're going to be better positioned long-term in your organization.
This episode of the M&A Mastermind podcast is powered by Cornerstone International Alliance, where leading M&A firms come together. As part of this international network, you get access to global opportunities, over 200 M&A experts, enhanced collaboration and knowledge sharing, and some of the best M&A tools and resources available, all to help you take your firm to the next level. Ready to join this exclusive network? Visit cornerstoneia.com/new member today. Speaking of all that you just mentioned, you go back to your private equity days, analyzing deals. What do they look for? What do private equity firms look for related to insurance and their policies and the coverage? And, how are you looking through that from that lens during due diligence that our advisors should know about?
So one, it says a lot about who you are as a management team and whether those policies or that program is transferable to the new buyer. Going through the process and with your insurance advisor and saying, is this institutionalized for the next buyer? How are they going to evaluate it? Are they going to say the pro forma is going to impact my EBITDA negatively, or is it going to show well that we've taken the right measures in place so that we're prepared going forward? So I think that taking that strategic review early and often sets you up for better success when you are going to transact. Little things can make a big difference. So I'll give you an example. We were doing a sale of a real estate property and doing the due diligence for the buyer. And when we evaluated it, the current program didn't reflect all the updates. It didn't reflect the probable maximum loss of the modeling of the concentration of risk. It didn't reflect any liability that can be transferred to their tenants or following state statutes to remove liability. And those are critical things that really help get the deal over the finish line. So from both a buy side and a sell side, it can make a real impact.
And obviously something you want to be in a good spot so due diligence doesn't get stalled as you're looking at these policies, to make sure that, one, you as a seller are covered, but two, in a transition, that the buyer is comfortable with what's in place as well.
Absolutely.
What, talking about a milestone event in a business owner's life is the sale of the business. Assuming that, I guess maybe after that, at that point in time, I would imagine, and tell me what your thoughts are on, when should a business owner, whether they've had regular conversations or not with their agent, when should they really think about, maybe we'll say maybe they're not having regular conversations, just for the sake of argument. So when they're thinking about selling, what does that process look like? When should they have the conversation with you and your team about, hey, we're looking to sell the business in X amount of months? How does that conversation go? When should they have that with you guys, just to make sure that, one, they have enough time to make sure they're covered, they're maximizing the value based on the policies that they have, and to make sure that they're going to go into this process in the best case possible for them?
It's a great question. So first, we look at the change of control provisions of each of the policies. Then we also look at what the tail coverage would look like in the event that you're ending your professional liability, management liability policies at a certain time, and how much of a tail do you want to purchase that policy for. And then you start the review of the claims history. You do trending on how the claims have been over the last 5 years, because ultimately all of those things feed into the deal transactions. And we set up due diligence files for our clients so that everything's structured, and we have those questions that are going to come back on the insurance side ready to go with answers and explanations on how the management team really took a proactive approach on all of those items.
So when a business owner is looking to sell and they're working with an M&A advisor to kind of, they're going to have a conversation. Does this relationship make sense? Are we going to be successful for you? And are we going to make sure that, we can get the best outcome possible, during that whole process, trying to understand if it's a good fit, what is the value? What can we think the market's going to bear? Like having those conversations, taking them to the market and going, how the process goes. What should, during that maybe those initial introductions, whether it's before the sign engagement or as they're looking to take them to market and understand value, maybe it's during the valuation process, I don't know. But from the M&A advisor standpoint, what are some questions they need to be asking now their new clients, the business owner, to understand their coverage, their protections, and all that sort of stuff from an insurance perspective?
So there are two different diligence streams. One is on the property and casualty side for the day-to-day operations. And again, that comes down to knowing the business model intimately and how those policies interact with the way the business works today. And then the second diligence stream is on the employee benefits. How do those compare to the rest of the marketplace? When you do a transaction, a lot's at risk with that employee base, whether they don't stay with the transaction, how do we retain those employees? And your employee benefits can either be golden handcuffs that help secure that stability through the transaction, or it could give them a reason to jump ship to another competitor. So I think doing some benchmarking analysis with today's data is a critical part of what the M&A advisor should be working on to see how this compares for other companies of the same industry and of that same size.
And do you see that as part of the equation, in that valuation process, we're trying to help them understand value?
Well, absolutely. Because again, the better prepared companies and the better prepared management teams are going to generate a premium in terms of valuation. And risk management is an important part of that because it drives operational resilience in the business so that investors and the financing can have real confidence in the go forward end.
What are some common things you see business owners maybe most unprepared for, or common things where their risks are exposed in certain ways that, if they would have done these regular meetings, that maybe they could be covered? What are some common areas in which, they miss maybe?
It's a good question. I'd say the common areas people miss are they're buying these policies, but then they don't have the operational preparedness that goes alongside that. They don't have the employee training to help mitigate claims going forward. They don't have the cybersecurity controls. They don't have the disaster recovery. They haven't reviewed their leases and their contracts. And so that's the part where it's not just about paying for a policy, but it's looking more holistically about the operations and driving value for the future so that you're set up for success.
Just for the broader independent, insurance agency landscape in general, how is it changing? What do we need to know as M&A advisors about the space to understand, what, if any, shifts are happening in the industry?
It's a good question. Say there's two big shifts to go through. One is that data analytics and specialization from the carrier side is becoming more and more important. So whether a certain client that you are advising on the sell side, is that going to transfer to the buyer? Something that's shifting right now because of that specialization of the carriers and how they underwrite risks today is much more detailed than it's ever been. The second part of what I think M&A advisors need to think about is there's been a ton of consolidation in the insurance agency space. There's a big difference between an independent agency that intimately knows your business model and has a native knowledge of the inner workings of your business, and they hold a really strong client relationship versus someone who just has it as a number in a laundry list of clients. And developing that relationship, especially for complex businesses, is really important for success because as helpful as AI is in driving operational efficiencies, I think people still rely on the human element, the trust that's built by those relationships.
And obviously those long-term relationships are important. I imagine that's what you guys strive to do and accomplish. And because you're going to better serve your clients, the better you know them, the longer you know them, and the better you understand their businesses. Why is that so important to you? And how do you feel like that is something that's going to benefit you guys as you said, this consolidation is maybe happening in the space?
I think it's about developing trust, and in the long run, it the sound advice from unbiased advisors compounds that trust. It leads to better referrals. It leads to better client service. It leads to better employee retention because they feel good about what they're doing. And it's not just processing and pushing paper. It's about who are you and do I want to do business with you? And are you going to be there for me when I need you? I think that when a lot of the independent agencies sell, a lot of times those relationships are lost in the transaction. And people are looking for that white glove boutique advisory role that's going to, give you their cell phone so that you can call them on a weekend when you really need them and you understand their family dynamics. You understand the intimacy of their businesses. You've been on site and you've walked the site with them. Those are the things that really make a difference for clients going forward. And I think for any business, those long-term relationships are increasingly important because while you do get those efficiencies in artificial intelligence, the human trust component really
We're in the business of people, right? And that's very, very important. And that trust, those relationships, building that rapport is so beneficial because you've built that over time, and you don't have to rehash everything with a new advisor every however many times you would in the course of a business life cycle. So to trust, and you know you got me. I trust you. Like, I know you're going to do what's best for me, because then you're going to make sure I'm fully taken care of. I know that's definitely something that's in line with just creating those relationships, having that, like you said, that white glove service that you said. Um, Last question, Brian. This has been great. What would for whether it's a business owner, an advisor, or just people listening to this show, what would you urge them to do differently, and how we all think about insurance as part of deal preparation and just the ongoing value proposition and protection that it provides?
the best advice I can give is to stop thinking about insurance as a commodity. Not all insurance is created equal, and really start shifting your mindset to insurance as a critical part of enterprise strategy. How does it drive EBITDA stability long term? How does it protect my cash flow? How does it protect the thing in my life that is most important to me? And once you shift that mindset and you take that proactive approach with your insurance advisor, you're going to be set up for better deal success, better long term growth, better service to your clients. And at the end of the day, you're going to be happier because of it.
Yeah, if there's anything we can do to make sure due diligence goes a lot smoother and not delay because of things that we can proactively, take care of, and this being one of them, I think we'll all be happier in the end. Brian, this has been great. Really, really appreciate you joining the show. An angle that we haven't taken yet on this show, and I love your insights, your experience from the advisor side, the M&A advisor side, the buyer side. Really positions you to speak very well on this topic in general as you look to take on the second generation of your agency. And best of luck to you and your family on that and all your clients. And I know you guys will continue to provide great service for them. But really, really appreciate you joining the show today.
Thank you so much, Nick. Great to be on.
All right, that's all we have for this episode of the M&A Mastermind podcast. Make sure to like, share, and comment on this episode. Pass it on to your friends that own businesses, other M&A advisors in your network that can benefit from our conversation here today. Make sure to subscribe and click that notification button to make sure you get updated on every new episode that airs. And typically that is every Thursday morning. Until next time, everybody, take care. Thank you for joining us on this episode of the M&A Mastermind podcast, and a special thank you to our presenting sponsor, Cornerstone International Alliance. If you enjoyed today's discussion, don't forget to like, share, and comment. We'd love to hear your thoughts. Make sure you hit that subscribe button so you never miss an episode. We'll be back next week with more insights, strategies, and real-life experiences to help you take your M&A game to the next level.